Okay, some new tax measures set to begin to take effect here in the new year. To break things down for us, here's personal finance expert Rubina Ahmed-Haq. Rubina, good morning and Happy New Year to you.
Happy New Year to you, too. I hope you guys had a wonderful holiday season and a good break.
All right, thank you. Appreciate that. First off, can you explain some of these new tax measures for all of us the new year is going to bring in, and just how much of an impact these changes are going to have for us all?
Yeah, so the tax measures are going to affect us in two different ways. In some ways, we'll be paying more income tax. They're increasing the marginal tax rate to reflect the fact that inflation is higher. So they're increasing that. So that will save us a little bit of money because you can make more before you have to start paying that amount of tax. But on the other hand, CPP contributions, especially for higher earners, are going up. They're bringing in a second CPP contribution for those who are the highest bracket to really supplement Canada's pension plan that will, of course, in the end, benefit us for those who pay into it. But that does, mean more money out of our pocket, a couple of $100 in some cases out of our pocket towards CPP premiums.
Okay, Rubina, you just mentioned some of these adjustments. Also, when it comes to federal income tax bracket thresholds, you mentioned that. Also explain with regards to basic personal exemption amounts.
Yeah, so basic personal exemption amounts are going up again to reflect the fact that with inflation, cost of living is higher. So you can make more money before you are at that threshold where you have to pay that next level of income tax. They're also increasing at the top end how much you have to make before you have to pay that top marginal tax bracket. So for everybody, this is we can make more money before we have to pay more income tax, but it does mean it does reflect really the reality that we are making more and more money. Last year, income went up almost 6 or 7%, and so that really reflects the fact that we can make more money before we have to pay that. We're in that income tax bracket.
All right. Also of note, there's going to be an increase in the annual tax-free savings account contribution with an additional $500.
Yeah, absolutely. So, last year it was $6,500. This year it's going up to $7,000. This is really to encourage Canadians to put more money away. The TFSA has been around since 2009. It's a really popular way for people to save money, especially for those medium-term goals. RRSP really is for when you retire, when you leave work. TFSA could be for saving for your first home, saving for a car, saving for anything really in the next 10, 15 years. As most Canadians know, the money that you put in, any gains you see on that money can be withdrawn tax-free. So that's the big draw for putting money into a TFSA. And in fact, for those low income, those who are in a low income bracket and don't expect to make a higher income throughout their career, a TFSA is actually a much better way to save for your retirement because you don't have to pay that income tax when you withdraw after you leave work.
All right, Rubina, this also means the elimination, this year also means the elimination of some short-term rental deductions. Can you remind us what this exactly means and how it pertains to us?
Yeah, so Airbnb, as one example, VRBO is another example. These are short-term rental companies, and they have become very popular in Canada, and provinces are really cracking down on the number of short-term rentals across the country, really to deal with the housing crisis. What they're saying is that there are a lot of short-term rentals out there that could be used as long-term rentals for families, for those who are searching for a home. And so for places that have brought in rules that you cannot operate a short-term rental, if you continue to do so, you cannot write off the expenses associated with that. So that could be cleaning costs, maintenance, utilities, all the things associated with running a rental, which if you own an investment property, you can write off those expenses, those tax breaks, as we often like to call them. They're saying that if you are running one in an area where it is now you're not allowed to, you can no longer write those expenses off.
All right. Also of note, Rubina, the government announced that the GST and HST will now no longer be taken off professional services rendered by psychotherapists in an effort to make treatment more affordable. What do you make of this change, and could it perhaps accelerate the demand for counseling services?
It absolutely will accelerate demand, and some of the criticism is that it will accelerate demand so much that we won't be able to get access to those services. These services are often not covered by our government plans, so we have to rely on our employer insurance or private insurance, and so they already are expensive and out of reach for so many Canadians, especially those who need those type of services, who are suffering with mental health issues or other stress that they're going through. And so, yes, taking the HST or GST off of those services is going to increase demand, but it may not reach all the people that actually need those services and can't afford them, whether the HST is tacked on or not.
All right. Rubina, we're going to leave it there. Thank you so much.
Yeah, thanks so much for having me.